What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you for joining us on this video. Got a fantastic pair lined up for you today. Euro USD smashed through the 1.2000 mark this week or last week, and we're looking for a retest of that area to enter a short position in the continuation pattern to the downside. Without further ado, let's get straight into the video, break it down for you and learn something new today. So, monitoring it on the daily, this is how I found the opportunity accruing. I did miss the initial break through the 1-2,000 mark here, which I've marked with our signature orange line at the area. I've even set an alert here for when the pair pushes back to my area of interest. So what we can see is the trade was, or the price I should say, was trading upwards nicely for the past few months since beginning of April. We did push higher highs, higher lows, but now in the past half a month, from the 15th or 16th of June, we've had a huge impulse to the downside, which has smashed through this area here of previous support at the 1.2000 mark, smashed straight through it. Brief retest here on this area, which will break down on the 4 hour. We can see the new candle formed, but there was a slight wick rejection here. This is actually the market retesting that zone when it broke through it, which will come down to on the 4 hour chart. Now what we're looking for is we're looking for the trade to push back to the 1-2,000 mark and to continue to the downside. So if I draw that out nicely, had the breakthrough, we're now in the pullback phase. As you can see, it has tried to, so we anticipate it to push down a little bit further, then come back up to formalize the W formation. As you can see, if I draw that on there for you, the W formation, and then continue to the downside. Okay, so let's break it down and get our confluences up and running. So looking at the monthly, we like to obviously see where the market is heading on the general terms. It's where the banks also use their signals from. They are the ones who move the money, so they look at the monthly. We can see that the market posted a high here 2018, which it has failed to break, and actually we can arguably say we're in a downtrend in this area overall. Yes, it has been trading up for the past year and a half or so, but we've reached this area here of resistance and we've not managed to post a higher high. Actually retested that area and a huge impulse the last month to the downside. So in my opinion, our edge is towards sell opportunities in general. Pushing down to the weekly, what can we see? Okay, we see the trend nicely panning out. We had the high, the high low, but then the high didn't manage to form, so it actually became a lower high. Still a high, but we anticipate a high low, sorry, but we anticipate the market to actually push to the downside and roll over based on what we've just seen. So we're in sell opportunities. Our bias is to the bearish side, to the bearish move. So let's go down onto the daily chart and get our trade nicely set up for the coming days. So if we go to the 4 hour, actually I'll just show you how the trade looked. We can see here 16th of June the market pushed down. It did actually linger at this level with a slight green candle to the upside, but then immediately melted back downwards. So you can see that the market tried to find support again at this level, but didn't manage to. The sellers are strong in this market, which is just what we want to see. And we'll get our confluences from the Commitment of Traders shortly. So you can jump on this trade when it comes for that retest and get on the winning side. Currently, we're in this consolidation period of the uptrend of the retracement. We're looking for the market to continue the pullback up to our retest zone here and then push to the downside. So confluences are, in layman's terms, support for our judgment. Okay, we want to have as many confluences on our side that supports our analysis of our particular subjective view on the market, gives us that confidence and the backup that the trend is going the way that we predict it to. So the first confluence that I like to always use is the Fibonacci. we take it, so where's my Fibonacci tool? There it is. We take it from the high down to the low. Can take a little bit of wiggling about to get it set. So the high from the last impulse leg, the major impulse leg, which is there. And what can we see? Now we see the market pushing those levels up onto the chart. So we've got the 0.236 level, the 382, the 0.5 isn't a fib level, but it's the halfway mark, and our magic number of the 0.618%, which is a long way away from where we are currently. So what we want to see is, we can clearly see that our 1.2 thousand mark, which I've highlighted here, which we anticipate to be the retest and the new resistance level following the support, is actually within a Fibonacci level. It's the 0.382% level. Bang, that's one confluence already sorted out. We have now that added booster that the market has the potential to push back to A, the major level of resistance, and B, the support, the level of the Fibonacci, which is fantastic. It's how the banks also like to trade. They're the ones moving the money. They like to use Fibonacci levels. It sets it out nicely for them. Now, in previous videos I have said that we like to trade from the magic number. Okay, great. This is a long way away currently. So what we want to see is, we want to see how the market reacts to the 0.382 level, to see if wick projections form, if the stochastic is showing that it is overbought or oversold or undersold, sorry. So we will want to monitor the trade and make sure that the market is going to reject from this major level. I think it will. It's a huge level. It's had previous support. We had a support here, pushing back. There was a false breakout, but support here and resistance here. So it's a level where there's a huge amount of supply and demand. In our instance, we want supply to push back to the downside. There's our confluence. Looking at how we take this trade then, we would get our short position tool. We would take the trade on the retest of this area. In terms of our stop loss, we want it relatively tight, but not too tight that we get stopped out by market manipulations, that then the market moves in our favor after it stopped us out. We don't want that to happen. So I would suggest that we have it just slightly above the previous indecision candle here. And that gives us some wiggle room, but also allows the market to stop us out if we are wrong. Now, why do I say that? I don't like to be negative, but the reason I say that is, if the market stops us out because we're wrong, we have the potential to retake the trade at the other area of interest, the 0.618, which again, the market should melt down and continue to the downside. So if we do get stopped out, don't worry, don't let it get to you. We have another opportunity to re-enter the trade. Obviously, as long as our trading tasks and our trading rules have been met, then we can take that trade. So that's how this one's going to go. Again, minimum 1 to 3. Easily here we've got a 1 to 4 if we're just simply going for the targets of the previous low. But I like to go on the weekly. Swing trading is all about time and patience, but then you get a huge amount of profit from it. So we could arguably set our target further down here at the lower low, which will give us a nice 1 to 6, even 1 to 7, or if you are being particularly optimistic, 1 to 8. But for now, we'll set it down here, 1 to 4, as our TP1, take profit number 1. So that is how we like to see the market move. Obviously, we're a few days away from this yet, so patience is key. Patience pays. That's how you want to take the trade. Now, the added bonus is, we want that confluence that the market is moving in our favour, because we want to see where the banks and institutions are putting their money. They're the reason the market moves in the way it does. Us as retail traders, we make up a small piece of the pie. Now, how can we do that? We go on a Commitment of Traders Club, the one-stop shop where you can find out what the banks are doing, the easiest methods, and it won't cost you an arm and a leg like some of these other trading mentorship programs out there. So head over there now. It's nice and easy to navigate, super user-friendly and super clean and concise information. So we'll go on the COT reports, Commitment of Trader reports. And we are trading Euro USD. All the reports are traded spot against the USD. So we'll go down to Euro. We'll view this report. Okay, and what can we see? So we can see that from the last 3 weeks here, the institutions and banks have closed out their long positions, and the net positions overall have dropped dramatically from plus 109,000 down to plus 89,000 net positions. Now what we can see on the chart therefore is because they've closed all of their long positions, this has caused this melt to the downside. They're not opening them, they're closing, they're taking profits from this previous push to the upside over the past few months. And by closing those positions, it has made the price obviously dwindle down. Now what's caused the melting? That's this huge change in the short positions that they've opened has caused the market to melt to the downside past our previous area of support down here. Fantastic. The banks have opened 26,000 short positions. Net positions have decreased. They're weakening the euro against the dollar. That's why it is now pushing to the downside. Fantastic. There's our final confidence to show you that we are on the right side of the market in this trade. We are trading with the banks. They are shorting now. They've moved lots of their client money into short positions and closed them long, taking the profits, and now they're moving them to the short. We are all good. We just need to wait for the market to push back up to our level, show us signs of rejecting this level again, showing signs that the bulls who are in the market at this stage are fizzling out, and the bears will take over into control. If you want more trading ideas like this, please subscribe to the Commitment of Traders Club, where we publish these ideas 3-4 times a week. To start with, make sure we have a good amount of trading data getting out there. Join the club, get access to all the COT data, our trading plan, plus much more. Guys, happy trading. Let me know how you get on. Thank you.